9% to a new 13-year low, while sales of existing homes rose by 2.9%. Is this enough to signify a change in the housing slump? How do these figures compare to South Florida's real estate? Here to answer these questions is Manuel Lasaga, president of Strategic Information Analysis and Economics and Finance Consulting firm, Gregg, business columnist for the Miami Herald and associate professor of business journalism at Florida International University, and Roy Oppenheim, president, Weston Title and Escrow, and real estate attorney at Oppenheim Pilelski. Gentlemen, thanks so much for coming. Manuel Lasaga, is South Florida following the national trends?
South Florida is following the national trend, but here we're feeling it much harder. As you mentioned, sales are down, but some segments are up. But I think we have to step back and look at the whole picture. Housing starts continue to plummet, so that's an indicator of the market still going to take a long while to absorb. Prices are down. If you look at the single-family home prices nationwide, they're down 10% as of January of this year. In South Florida, they're down 20%. So because we had such a strong, hot real estate market, we're going to feel it, I think, much harder than the rest of the country.
And much longer?
And I think probably longer because of the oversupply that we have. Now, I don't think we're going to touch bottom this year, but I don't know when we will touch bottom. It's just my sense. And this is really what's aggravated the economic situation and why we're now entering a recession.
Gregg.
Yeah. Well, I think a couple of things are working here. One is that a lot of families in South Florida can afford a house maybe in the $240,000, $260,000 range. You're seeing a median price still way above that, which indicates to me we have a lot of room probably to fall yet. The other thing is that migration into the region from census data. People aren't moving here because they can't sell their homes in New York or Boston or wherever as well. Traditionally, that's been a way that we worked off the glut of housing when we had one. So until the housing glut is taken care of in other regions, we really can't take care of ours because we don't have new arrivals.
Roy.
It's very interesting, but one of the important statistics we need to look at is that over half the people in this country have no equity or negative equity in their homes. And that is going to create some very dire social political implications. You have people who are constantly just abandoning their homes and taking off. You have neighborhoods that are going to be blighted. I've seen homes that have been stripped down to the bare bones. The police came. They thought they were at a construction zone. In fact, they were at a home that had been absolutely stripped out in an upper-end, high community in Weston, actually.
And needless to say, a home like a home that looks abandoned, or in this sense stripped, affects the property values of the immediate vicinity.
So what happens is you now have foreclosures that are coming on the market. If you want to sell your home, you have to compete with the foreclosure, and on top of it, you have to compete with the builders who are literally putting their homes at a 30–40% discount so they can get rid of inventory and start over. So until those factors are completely absorbed, prices, by definition, as Manuel has said, are going to keep dropping.
Yeah. And I think, you know, this is a very important point about prices. If you go to the stock market prices will fall 40% in an hour. In other words, financial prices fall very rapidly. The real estate market, home prices don't fall to that extent. It takes a long time. Why? Because when prices start to come down, people don't want to sell their home. And so that's contributing to why real estate prices are going slow versus the price of a company's stock in the stock exchange. Another thing that we have to be combining with what's going on now is that we're now entering a recession. So the housing situation, the real estate market was bad here to begin with, but now we're entering a recession, which creates a new dynamics, is that people are going to be losing their jobs, and they're going to be not going to be able to find a home.
One example that is also occurring is, let's say you can afford a home and you find a home and you like that home and you go to a lender and he sees that there are 5 foreclosed homes in that neighborhood and the price may be whatever. When that's taken care of, there is a really good chance, even if you're creditworthy, you can't get a mortgage for that house. And there are whole buildings even where people can't get mortgages even though they can afford it.
But I will tell you, just in the past 2 weeks, that is starting to change. We have seen this massive equity infusion that the Federal Reserve has placed into the economy. Hundreds and hundreds of billions of dollars that they've placed in have loosened the lending markets.
I think that's important, but I think it's been a mistake in the sense that the Fed has been pumping billions of dollars to financial firms, what basically burned their cash in Las Vegas. executives are getting bailed out of these large firms, and very little of that is going to the little guy, the person that's working 2-3 jobs to pay their mortgage.
But the little guy now has the chance, for the first time, who thought he was priced out of this market, the New York City market. These prices are coming down. They're going to actually have a chance to get back into the market. I mean, the New York Times was talking about the fact that people now can get reservations at restaurants that previously they couldn't go to.
But now I think, again, I want to go back to the issue of recession. This recession is going to really hit us. It's not going to be a very, very long recession, but it's going to mean that some of these people who now could probably...
Why do you think it's not going to be a long recession?
I mean, it's not going to be very long, but it could be maybe a year. I mean, much longer than the last one we had. I've been looking at
because the Federal Reserve refuses to allow it to occur. They keep pumping hundreds of billions of dollars into the market.
That's not their job?
Well, I think that there's a limit to, as Manuel says, who do you bail out? Nobody's bailing out individual homeowners. They're bailing out Bear Stearns. You know, I am bothered.
I think the problem
by that.
and the risk, as Gregg is saying, with the Fed's action is that they pump so much money to bail out the very large firms because they're the ones that got into trouble, and that is also going to add to more inflation down the road. So consumers are already getting hit with higher oil prices. They can't afford gasoline. So I think that this is what's going to make the housing slump was the kicker that got us into a recession that now is going to be worse because of the housing crunch.
Clearly there's been a double bubble. I mean, the real estate market just grew too quickly. At the same time, there's just too much cash around for liar loans, for people who didn't have to show income, who misstated. I mean, there was just unbelievable amount of fraud. It was just too easy to get money.
Down on $700,000 houses.
I mean, it was a little bit absurd. I mean, let's call a spade a spade. But having said that, the market's completely tightened. There was almost no activity, and now we're starting to see new activity. We're seeing the bottom fishers coming out. We're seeing first-time home buyers coming out. We're seeing new government programs that are trying to encourage people who've never held a home before.
Government programs got us in this mess.
Well, I think
be careful about your solutions.
I think the government can have an impact if they spend the money wisely, and I haven't seen that. I mean, there's lots of infrastructure and public works where the government could give a stimulus to the local economy. But once again, financial institutions, banks now are going to be also having to decide, should I give that person a mortgage when they're in an industry that now is in the midst of a recession and that person might lose a job. So it's a double situation.
Roy makes an interesting point, and that is that because the property values have gone down, now it's become much more affordable for those people who were locked into their homes, because let's say you could sell and portability wasn't an issue. What on earth were you going to buy?
I would not be a homeowner in Miami today had there not been a housing bust when I moved here.
Absolutely.
Okay.
And so, I mean,
well, who's going to buy when the sentiment right now is that the market is not going to hit bottom for a long time?
Well,
they're waiting too. They're like the ones here.
I don't know. If I had euros, I wouldn't wait too long.
My point is, you can't time the market perfectly. The price is still coming down, but if you're going to stay in your home 3-4 years, whether you buy today or you buy in a few weeks or in a few months, you're not going to time it perfectly, so you might as well start looking. Interest rates are down. It's a good time to start considering to buy a home. The problem is going to be that if nothing happens, you're going to start having the type of urban blight that we associate with large cities in suburbia. And it's happening in certain communities around the country, and unless there is a concerted action, whether it's the Federal Reserve or government, to properly step in, nothing's going to change. And in fact, one of the reasons why people are coming back into the market is because they saw government action. In fact, this bubble popped.
It gave them confidence.
Absolutely. Yes, this bubble popped 3 years ago. It happened literally contemporaneously with the hurricanes of 05. And since then, there's been just a continual decline in the price of real estate in this country.
If Bear Stearns can be bailed out, why can't the individual homeowner be bailed out?
Because the government right now is in a panic situation. The Fed is pumping liquidity because it feels that if the big guys break down, the whole economy is going to go down.
But that's true.
Well, I don't know.